Guys, we aren't that far into April, but the way the calendar falls, this is technically a week, I suppose. Surprise, surprise, major turnover on the power rankings, a log jam at the top, and I am now the only one in red figures. So lots of good things to cover this week. Kyle, what's the view like from the front?
I mean, honestly, I haven't really had any big gainers. Just everyone is doing not too bad to start off the month, so that's kind of,
Okay.
I guess,
Everybody's doing what they're supposed to.
Yeah, everyone's added up to the lead. Boeing was my biggest, contributor last month.
Okay.
This month so far, they're actually slightly down, but Shopify and TSMC are rebounding, I guess, compared to relatively down months that last month. Tesla is kind of not really doing anything, and then Microsoft and eBay are small, but we'll call them solid contributors to start off the month. So that's I guess that's added up to not too many negatives have added up to being out front so far.
All right.
But it is very tightly contested at the top. It looks like according to the ranking.
Yeah, I mean, all three of you are less than a percentage point apart.
We're like 0.6 apart, basically.
Yeah.
Less than 0.6, but yeah.
For all intents and purposes, yes. Yeah, Austin, I feel like you, out of all four of us, are consistently just kind of humming along. Nothing is ever too dramatic. Nothing is ever too flashy. You're just always lurking right around the middle part of the leaderboard.
That's what I like. I've had a consistent second place since we started.
There you go.
With a few times bumping into third, falling down into third, but yeah, everything is just doing what it's supposed to. In terms of dollar amount, at the start of this month, Ripple has contributed about 25% of my total dollar amount, and then the rest is just equally distributed amongst the other shares I have in my portfolio.
So you're going heavily into Ripple, I guess?
Well, I'm just going to keep my position there. It's kind of just keeping me up in second place right now.
Yeah, I mean, since the start of April, they've been on a tear. I've seen them come up in the headlines a couple more times with all of the shenanigans going on with the Securities and Exchange Commission. It doesn't sound like that's very close to getting resolved in any meaningful capacity, but certainly doesn't sound like they're in jeopardy of anything too serious at this point, or at least they don't think so. But something to follow for sure. There could be a lot of upside if they come out of that free and clear on the other side.
Right.
Kyle?
And then, sorry.
Oh, no, go ahead.
One cryptocurrency question. I heard that Dogecoin.
Dogecoin?
Coinbase. Is it going on? Yeah, Doge. Is it going on Coinbase? Do you know?
I honestly don't know.
Okay.
I haven't looked yet. I'm very interested in the Coinbase IPO. I don't know that I have that many substantive thoughts to share quite yet, but something to watch if you're interested in cryptocurrency, but you don't have the stomach for the extreme volatility of actual coins or tokens. Might be something to look at.
Okay.
But going down to third place real fast. Kyle, we were so close last month. You were like 0.7% in the red. But you've turned it around the first couple days of April. Where are things at? What's pulling its weight so far?
I mean, yeah, it's kind of similar with Kyle's for the most part. Like, everything's kind of just, like, solidly on the way up. But I guess my two biggest, leaders are TSMC and Pinterest. So
Okay.
I guess I'm always confused as to why Pinterest is fluctuating the way that it does, or like pulling as hard as it is. Because like as a non-user myself, I just can't tell you why. But I mean, I don't know. Maybe people are like, maybe it's that Home Depot mindset, you know? It's that home improvement mindset. Like, oh, I need more Adidas. But I don't know. It could be, I don't know. I guess various different things. But yeah, so TSMC and Pinterest are really the big pullers.
Interesting. Okay, so then quick question for everybody. Since this competition began, what is your all-time performance percentage?
Oh, I'm still negative. I'm sure.
I'm in that 7.87%.
Okay.
9.72%.
Okay.
Negative 9%.
Okay.
Okay, it's still a 9.
Yeah, man.
Still climbing out of the GameStop hole, but that's okay.
Yeah. I mean, I think my lowest point was negative 18. So I've cut
Okay.
it. Or negative 16. Negative 16.
So you've cut that in half. You're making progress.
Almost cut it in half.
Okay.
Well, game's not rebounding a little bit. You know, that helped out a lot because I never sold the position until it took off a second time. I guess it's like holding at $200 right now. But so when it rebounded, that allowed me to dig myself out of the hole a little bit. You know, then have to take like a total like 80% loss on the investment, I think, or whatever it was. So being invested for the people, I guess, paid off a little bit. Okay, I won't say paid off, but it lessened the blow long term, I guess.
Okay.
But yeah. So I steadily gaining it back. Ripple was a pretty good investment for me last month. I don't know if I'd want to jump back in again. I know it's working really well for Austin, but maybe I don't know, would look into other coins too. I don't really know what investor really offers in terms of other cryptocurrency. Given that they push Ripple so hard, maybe they don't offer others.
There are some others on there. Because, I mean, that kind of gets me to my main point with where I'm at decision-wise. Obviously, right now, I'm very marginally negative. It's nothing to be concerned about. But, like, all-time performance, I'm at 17.3% since February 1. But as much as I believe in Bitcoin as a long-term store of value, it's been stuck in the same, like, $3,000 or $4,000, dollar window. I think it's been between 57 and 60 for like the better part of 2.5 weeks, give or take. So I'm wondering if I just cash that out, buy something else, and then come back to it. Or if I just hold it and see what happens.
Like you're saying, you don't think you would miss out by selling for a little bit, investing somewhere else, and trying to make money quickly, and then coming back and trying to catch it before it explodes again.
Yeah, I mean, I feel like it's in a holding pattern. If it's going to stay here for a while, there's money to be made elsewhere, but that would also be the quickest way to make me look like a total dumbass if I sold it and then it broke 60 and stayed at like 65 or 70 for a while. Then obviously that's not good either. But yeah, so for the month, I'm actually down. Bitcoin is down. Alaska Air and DraftKings, like, at this point, it's practically automatic. I know there's no such thing in the stock market, but it really feels that way. Like, every day I look at it, and I feel like it's green. Target is finally coming back around, which is good. Tesla, Ericsson, and Canadian Solar continue to confuse me. Like, I see so much upside, and it's just not translating. So, but I'm fairly in the red on all three of those. Oh no, Ericsson I'm actually up 2% now, okay. But Canadian Solar and Tesla, I'm double digits in the red, so I don't really want to get rid of those. Like, in real life, this would be a good time to do tax loss harvesting and just take that so that I could reap the benefit by not paying additional taxes on some of my capital gains. But obviously this is all fake money and tax loss harvesting isn't a thing. So, throwing some of my traditional logic out the window. But yeah, I saw Mark Cuban had some interesting comments on Ethereum this week. Goldman Sachs just announced that later this year, some of their wealth management customers are going to get access to Bitcoin and other cryptos and crypto products. So, lots coming down the pipe. It's just a question of how the market's going to respond, I think. But the big question of tonight, and I'm glad that we have the gang all together for this, because since we've started this whole thing, we have constantly talked and researched and attempted to distill how do you define what a socially responsible investment is. Like, there's no market consensus, there's no industry consensus. Everybody has slightly different beliefs on where do you draw some of those lines. And so I thought it would be a good time to kind of parse out some of these things, because I'm sure all of you saw the news this week about Amazon drivers attempting to unionize in Alabama, freight drivers peeing in plastic bottles so that they meet their delivery quotas. Like, this is a company where Jeff Bezos has pledged more money than any of us will ever own times a billion to combat climate-related crises across the globe. And yet on a human resources front, like, this is a disaster. Like, you're hiring fake people to tweet out union-busting stuff in Alabama. Your drivers are urinating in plastic bottles in their motor vehicles. Like, what on earth is happening here?
I mean, it's entirely possible for someone to be good in one area and very crappy in another, right? Like, that's true with people.
Well, yeah, and I think that's the hardest part about this, is like, and I'm not expecting us to get to what is the right answer. I'm mainly just curious, for each of you as individual investors, like, what is your process? Because you could easily view Amazon as an ESG-friendly company if all you look at is the Climate Pledge Fund and all that other stuff. On the other hand, if you're looking at the human resources front, this is clearly atrocious, and there's no excuse for it.
I mean, you could say
So,
I don't know necessarily about S&G. So, like, I
Yeah.
wouldn't call it ESG friendly. You know, if all you care about is E, which is, you know, fair. Some people do, but that's fine. But, you know, they definitely struggle, to say the least, in other areas.
so then for you, and we'll roundtable this because I think this is an important question. Do you look at things that are particularly strong in one area with an interest in continuing to support those behaviors? Do you look at companies in the areas they are weak and invest in them with an interest in trying to change those things? Or do you avoid companies altogether that engage in any type of bad behavior? Because these are the three schools of thought I read the most about. These are the three schools of thought I hear the most about. And, you know, everybody comes down in a different area for their own personal reasons. But I think it's important to at least talk about them and kind of give people watching this an understanding of, like, in a sense, all three of them are okay. It's really just a question of where are you at, what do you believe in, and what is your objective?
Probably depends on the company, like whether or not I think they're capable of changing.
Okay, so we'll use Amazon then. Would you buy Amazon today?
Or buy Amazon today? I own some Amazon today, so I guess yes.
Okay.
You know, like, would I invest more money in them? It would probably make more money, but I don't know. It's fairly disappointing what they do, so maybe not. Because, like, I'm not really convinced that they're going to change. And I think that they have a lot more influence in, like, you know, the workers' rights area than they do in the renewable energy and green resources. And not that their contributions are not meaningful, you know.
Yeah.
They obviously pour a lot of resources into it. And, you know, AWS is probably, like, one of the biggest users of electricity and, like, you know, makes a huge carbon footprint. So, you know, reducing that is important. But, you know, like, if Amazon gets away with treating its employees really shittily publicly, like, everyone is going to do it then. So, you know,
okay,
it just seems like it is a bigger. Their negatives happen to be in a bigger, more important field that they can influence to me than their positives. So I guess looking at it from an ESG perspective, I would say no. I probably wouldn't think that they're going to change. Like, you know, like, I don't think me giving Amazon money and being like, you need to change your ways would convince them to change. I think they're going to try to say, like, no, we're not going to. And until someone puts their foot down and, like, you know, stops us from doing this thing, it's making us a lot of money. And it's making you a lot of money, so you should just shut up and be happy about it.
Okay. So you're buying the fact that the green energy contributions mean something, but not nearly as much as the potential human resources benefit if they actually chose to take those things seriously.
Yeah.
You're bearish on their ability to change because you don't think they want to.
Yeah.
Okay.
I mean, Amazon employs a large number of people, they're a very public-facing company. If they were at the forefront of workers' rights and laborers' rights, especially because Amazon itself is an entity that has workers in a lot of different fields. Like they have obviously warehouse workers, they have truck driver workers, they have software engineers and corporate workers that they employ in like mass amounts in all of those fields. So shared good workers' rights across all of those would be pretty. I feel like a pretty good statement, but
Yeah.
I feel like more impactful than as much as Amazon does for their their renewable energy and stuff. Like how much public recognition from the average person they get from that.
Yeah.
You ask just some Joe off the street, like, what do you think of Amazon's efforts to change the world, reduce world energy use? They'll probably ask you like, what have they done? Like you can tell them and they'll be like, that's impressive, but you have to tell them. Whereas you ask them, what do you think about how Amazon treats its employees? Most of the people today are gonna have an opinion on that, good or bad.
Yeah. Yeah. Okay. So we've got one opinion noted and on the record. Kyle, where are you? Would you buy Amazon today? Why or why not?
I mean, I'm kind of in agreement that I feel like I weigh the employee, how they treat the employees as a more, I'm not gonna say more relevant, but I don't know, it's a more apparent, it's something that would be more apparent and would potentially affect myself,
Okay.
If as obviously the climate change and stuff, initiatives that they're doing are solid and good, but I guess in a more immediate front, then the way that the precedent and the way that they treat their employees is could potentially affect me more. And then also at the same time, it's just, I don't know, I mean, I lost my train of thought, but so I mean, just the way that they treat their employees is, I mean, it's kind of, at least I don't know, for myself being in this area, being from Washington.
Yeah, I mean, we're all kind of in the shadow of Amazon and Boeing and Microsoft and all those.
Yeah. And even I don't know, I have firsthand experience. Okay, not first, but I've talked with people my friends who have firsthand experience with how poorly they've been treated in working in the warehouse and stuff.
Okay.
And it's just I don't know, the stories that I hear are not great versus but at the same time I don't know how public knowledge that is. A lot of people are also they don't care about Amazon's environmental impact or whatever happens. They just want their package, right?
Mm-hmm. Well, and I think that's part of the difficult part for them as a company. Yeah. You work in shipping and logistics, so your carbon emissions, that is a very, very large daily issue that you have to deal with and try to figure out. Yeah. However, it's not nearly as visible and tangible to the customer because, your emissions just go up into the air and they disappear to the naked eye, whereas the person who delivers the package to your front door, that's a real person right in front of me right here. Yeah. And so I think that's part of this issue for them is both issues are serious, but for a lot of people, the human-centric one is the one that grabs their attention. A, because it's obviously a negative issue as opposed to them attempting to fix something, but also because it's far more tangible.
Yeah, it's more apparent, and then, like you said, there's the human element to it.
Yeah.
It's relatable. I wouldn't want to piss in a bottle while I'm driving.
No, nobody would.
Yeah. So, it's just, I feel like I guess the human, or the HR type issues are, I guess, more apparent and they weigh more heavily on me.
Okay. So then, Austin, as the lone Amazon shareholder in this fantasy finance competition, where are you with all of this?
So, I think of this as a lesson I learned in one of my economics courses workforces. And this is going to be the most extreme example of how a company treats employees, but it's a new way of thinking about it. So if you take a look at things like child labor, working at sweatshops for Nike in Honduras, or the sweatshops in China, they're working long hours, they're not the best working conditions, but at the same time, you have to ask yourself, they're working there because that's the best opportunity available to them. If they had better opportunities, they wouldn't be working there. And with like the child labor stuff, and like with Nike in Honduras, or those developing countries, you have to think to yourself, if that 15 or 16-year-old wasn't working at the sweatshop, they also most likely wouldn't be going to school. So they're making money, they're contributing to their household, and they're essentially creating a better standard of living for the family. But they do have the poor working conditions. So that's the way I approach it. Is people in these warehouses or these truck drivers, it's not the best working conditions, but they wouldn't be working there if they had better opportunities available to them.
Okay. So then, as a follow-up question, in your opinion, is it incumbent on the company to improve those conditions when things like this make the news?
Yes, I think it is
the
company's responsibility to address it, because if the public, if unfortunately in these situations, the public has to have enough issue with it where it's impacting the bottom line of the company.
Yep.
And I haven't, I don't follow it closely, but just on my Twitter or my social media, I've seen the issues of like Amazon creating Twitter accounts to basically have anti-union propaganda and things like that. So they're getting a lot of bad attention right now, and a lot of people are upset with Jeff Bezos. A lot of people are upset with Amazon. So when it gets to the point of it affecting their bottom line, most likely they will step up and try to find a solution.
I think that's true, but I think for me that also underscores part of the problem with some of these things. You would think, and again, this is nothing more than me attempting to connect a logical sequence of coherent thoughts, if I improve the working conditions for my employees so that they don't feel like they're treated like human garbage, does that not reduce on-the-job injury, improve attendance, potentially improve productivity? I feel like that there are enough positive externalities to just addressing these things, A, to be a decent human being, but B, even if you are the most cutthroat of all cutthroat corporations, it would seem to me that there's enough economic incentive to not treat people like garbage at this point. Again, not that that's the lowest bar you ought to want to clear, but I guess if that were true, I feel like we would see it more.
Yeah.
So where's the disconnect?
Well, maybe you're just wrong. Maybe it is more profitable to just treat people shitty. We want to pretend I treat my employees nice. They work harder for me. They get more output. Maybe that is true for certain industries or certain jobs. Maybe it is the case with warehouse workers and truck drivers running into the ground and just dealing with the accidents, as they occur. It's more profitable to just ram as much stuff through as possible than, optimizing the ones that go through, I guess.
And another thing I think about...
Oh, his internet.
Oh, we lost him.
Just through my social media feeds, but how much of this issue is just a few anecdotes, and how much of it is...
Oh, we missed the best part.
I think we all know what he's trying to say. How much of it is a few anecdotes, and how much of it is widespread evidence or a proliferation of specific behavior?
Exactly, and I don't have that data, so. But if it's just a few anecdotes, is it really worth the company's time to really address it, compared to if it was a corporate-wide thing?
From a policy standpoint, maybe no, but from a humane standpoint, if one of your employees feels like they need to piss in a, if even just one of your employees feels like they need to piss in a bottle to get their job done, maybe it is they are just not productive enough to handle the job, but then you should probably let them know about that instead of having them piss in a bottle.
Well, yeah, and so I think for me, this is where I get hung up on some of this stuff. Like, I understand from a raw bottom line economics perspective that there is rationale for all of the decisions that they make. Like, the reason things are set up the way they are is because they've spent millions and millions and millions of dollars trying to figure out what is the most efficient way to do everything that we do. And this is where they are. But it begs the question, and exactly what we've been talking about, like, just because you can be more efficient doesn't make you immune to the consequences of that. And is there an argument for less efficient is better if it means that you can remove all of those negative externalities? I would say yes, but I'm not necessarily the most cold-blooded economist amongst the group.
Well, I mean, I'm sure even a cold-blooded economist would agree with you. Essentially, what you're saying is you have to assess the risk when you decide to put profits ahead of things that are considered ethical, but that you can get away with legally, I guess, or on the down low or whatever. You have to decide, if it were to come out and the public were to find out, the blowback we would receive, would that be worth, whatever amount of profits we think we would have gotten, whatever amount of time we think it is before it's likely to have us, found out.
Well, and that's where this example is particularly interesting to me, because no one is larger or more globally ingrained in every single person's day-to-day life than Amazon. And so, like, that's where I think the ultimate shortcoming is that they're so ingrained that they're immune to a lot of these consequences. Because, to Austin's point, small pockets of people may get mad, they may boycott Amazon, they may shop somewhere else. But it's never enough in the grand scheme of Amazon's empire to actually force them to change anything. So, is Amazon an ethical investment?
One more point to add. With the issue with the truck driver peeing in the bottle, how much of that is an Amazon issue, and how much of that is just a regional boss issue for Amazon?
Yeah.
I mean, again, I'd like to think that you have oversight over all of those people, but realistically, that is a fair point. And so I don't pose the question, are they an ethical investment, to force everybody to answer it, because I think the whole point of this discussion has been that there is no right answer. But it goes, for me, it serves to underscore the point that ESG is messy. Impact is messy. Like, any type of investing that attempts to make positive change is going to be messy. There is no black and white. There is no cut and dry anything. But I would still argue that in the face of taking the good with the bad, it's always worth trying to do something and trying to work with a company even when there are shortcomings, than ignoring them entirely and moving your money somewhere else. But that's me. I'm very curious to see how that union vote in Alabama goes, though. I think they said Monday or Tuesday? Wednesday at the latest, they should have results. So, because that, I think, is potentially the even more interesting talking point moving forward. If that Amazon warehouse unionizes, what about the rest of them?
Yeah, that's like a huge precedent for the rest of
Yeah, it's a huge precedent and potentially one that could absolutely transform the way that they do things. So, absolutely something to watch. The other thing that was on my mind this week, Obviously, the ship in the Suez Canal has been set free. And I know we talked a little bit last week about, was there a buy the dip opportunity with some of these things? And you guys can correct me if I'm wrong, but I didn't really see much of a dip. Like, it didn't seem like any of the global volatility that people were afraid of because of this disruption, at least to this point in time, has not been realized in the prices of anything that's publicly traded. With the exception of maybe some commodities, but I don't honestly pay that much attention to commodities. So, I mean, did you guys see anything?
Nothing in the things that I was invested in.
Okay.
The only thing that I was kind of wondering might get affected was like, shipments from China to Europe. I guess
Yep.
I was like wondering if that would affect TSMC in some way. But TSMC is doing well at the start of the year, so I'm guessing no. I mean, it's computer chips, so like the odds of them being transported by sea fairly low, I think, right? Like you would probably fly that because they are sensitive components. At the end of the day, you don't want them to get damaged.
Sensitive to moisture. Yep.
Yeah, so I don't think even even sealing them up, putting them on a ship is probably a large task. Plus, if you want them to get places fast, right? That's the whole point of a shortage is everyone wants them. So you should probably like throwing them at people as fast as possible. So that was one thing that I was kind of curious to see if it would get affected. But for the most part, everything else I'm invested in, I wasn't really sure if it's like global shipping, but I wasn't really sure like how much it would be affected by it, to be honest. And it didn't seem like it changed too much overall. Most of the other entities are, I guess they weren't worried about that type of shipping, where they're kind of like Shopify, which is like or like Microsoft, which are like tech companies that are not really as invested in the availability of global goods, I guess.
Yeah, I mean, if you're into services, obviously that side of the economy is a lot less dependent, to a degree. I mean, if you need some of those raw materials to perform your services, you have a serious problem.
Yeah,
but like in your specific cases, you you don't have those dependencies.
Yeah, I mean, I'm kind of in the same position where a lot of my investments are like services and stuff. So not really anything that I was keeping an eye on that was like severely that was impacted directly with it or like significantly.
I gotcha.
So yeah, I guess I can't really say that I noticed the dip necessarily.
Austin, did you see anything?
I didn't see anything, but I would give it a little bit more time because I don't know how elastic this issue is.
Yeah. Well, and that's a good point, right? The elasticity of some of these things, if you have supply on hand, but you can't replenish the stock of that supply, then perhaps the shock isn't felt for a week or two. So, something to watch, for sure. Alrighty. Obviously, like I alluded to early on, very early into the month, yours truly is again the reigning champ. But with 4 full weeks left in the month of April, come this Monday, are you guys happy with where you're at? Are you looking at any changes? Are you cashing in anything that's been a big gainer?
I was actually kind of looking at oil. I guess oil, the commodity, is not available for trade on Investor, but there are I guess I could invest in any petroleum company that's on there, or I think they have like a ETF, like a U.S. oil fund or whatever that you can invest in either. But given that vaccines are kind of ramping up in the United States, just from what I see on the news and people, not necessarily my friends, but people that I just see posting on social media, sounds like people want to travel. Sounds like people want to do things. When I go out, everything is packed. People want to drive. Might be a good idea. People want to fly. Everywhere needs gas to go still. So. Kind of sounds a little interesting.
Investing in oil commodities in an ESG web video series.
I mean, I haven't yet. I've just been watching it. It's on my list.
I'm giving you a bad time.
Just curious.
I mean, the logic is there, though. We've talked about this many times. Like, if there is a stock that's undervalued and the economic recovery has not hit it yet, now is the time to buy it. That is where the money will be made. Like, Kyle and I have seen it with airlines. Like, it's gone extremely well. And it probably will continue to go extremely well. So if there are other things that you can find, do it. Kyle, what about you? Eyeing any changes? I know we've been flirting with the idea of Home Depot for a while. Doesn't look like that's happened.
No, I haven't, dude. I did.
You did?
Yeah.
What?
I sold Adobe, and now I have Home Depot.
Oh my
I don't know
goodness.
if that was necessarily the best move, because now Adobe is swinging up too. But I think there was a few days where Adobe was down and Home Depot.
Oh, there it is. Yeah. All right.
Yeah. So yeah, that was actually a very solid move for the end of what was it, February?
I was going to say, you're worried about Adobe going up. Like, I'm looking at the last week of this chart, and, like, it's literally gone straight up.
Yeah.
All right, well, potentially a force to be reckoned with amongst the group this month as he cashes in on the home improvement bug. And a crippling lumber shortage.
Yeah. So I guess we'll see with that. But I think the rest of my portfolio is like, I like it. There's a few other, I guess maybe, I don't know. I guess I don't know what I would sell in order to make room for other things.
Yeah.
So, but there's like maybe a few other also travel related things that I'm kind of keeping an eye on. I guess not directly travel related, but like, yeah.
Okay, I gotcha. Austin, what about you?
I like consistency. My strategy has always been consistency, so I will not be touching anything.
Nice.
How did I know? Yeah, I mean, you haven't won anything yet, but you also haven't lost anything yet. So I'm having a hard time taking issue with your strategy at this point. So, yeah, like I said, I don't know. I'm eyeing the rumblings of Bitcoin kind of hanging out and staying for a while, but I think it's too early to tell. But yeah. It's also very, very tempting to just cash out the 89% I've already made on it and just run as fast as I can, but we'll see.
That's huge.
We'll see. It's tempting, but at the same time, it's also very not tempting because I feel like there's way more upside. It's just a question of whether or not it's able to hit it and how long it would take to do it. But anyway, that's me. Any closing thoughts from anybody?
Nope, not for me.
I don't think I have anything new.
All right. Well, good luck next week, everybody. Have a great rest of your Easter weekend, and we'll be back next week, same place, same time, to do it all again.